getting very well discounted down to $5 each. That's pretty cheap for Medicare leads. So just wanted to mention that. I'll have John send that website out. So when you get done with training, you can check it out.
This is not, if you guys have seen these kind of things before, you guys don't have to be in here. We're getting a lot of questions about the ULs versus non-guaranteed and guaranteed who we're going with. So if you guys are managers, trainers, veterans, you guys don't have to sit through this. It's going to be a bucket presentation like you've seen before, and then I'm going to actually took an hour and actually come up with quotes on all the different ones so people can kind of see it from a different style, all right? But yeah, so feel free to leave. You guys have already seen this before. I've done the same thing quite a few times. So this timeline here, I'm a big picture guy, so this is the way that I actually look at life insurance as a whole. And they're just very, very basic things. This is the cheapest form of insurance you can get, okay, without including like accidental policy. So the closer you are on this side, it's the cheaper plans. This is like a term life insurance. Who's term life insurance good for? Young couples with kids, right? Why? High death benefits, low premiums. A lot of the ones that we do now are actually convertible. So if you have someone like my age who has young kids and that wants, life insurance, if they're going to spend $100 a month and they can get a $50,000 whole life or $1 million term, obviously my wife's going to want $1 million term instead. After that 20-year term is done, you can actually convert it to a permanent life insurance without proving insurability. So I'm not going to talk too much about term, but just so you know, that's the drastically left side. The drastic right side is going to be basically just basic whole life. The best one right now that I actually just ran is for a 65-year-old male. I'm going to show you figures on this. But a basic whole life in Transamerica comes up as one of the best ones, okay? With whole life, with a basic whole life, there is no paramedical exam. It's a simple issue product. You apply for it, you go to CSG Actuarial to find the basic whole life quotes, and then you can compare them to everything out there, okay? Has everybody been on the CSG Actuarial site? That's where we run our Medicare supplements, final expense. Any questions at all about that? Okay, just want to make sure, because that's the easy stuff. So if you guys don't know that, we need to have a separate training. But that's the basic whole life. Those are going to be people who just want burial insurance. They don't want to have, huge life insurance policies with big premiums. I just want $10,000 for burial. You can go through Omaha and the other ones that are there. With whole life, there are 3 things that are guaranteed, okay? The cash value is always guaranteed, okay? No questions asked. That's why in the back of a Omaha, when you deliver it, you can see in year 9, cash value be exactly $2,180 because it's a guaranteed finite benefit, okay? The second thing that's guaranteed is the premium they paid for it, and the last thing is the death benefit, okay? So if you look at this like a bucket, you guys have seen these before. This is another way that I kind of illustrate how these work. If I have a basic whole life, and this is a $20,000 policy, the $100 going into a whole life is guaranteed, right? The death benefit of $20,000 is also guaranteed. The little holes in the bottom of this bucket that comes out is the cost of insurance. This is also guaranteed. Okay? So when you put $100 in, $70 comes out, there's $30 left over. The interest rate that this cash value grows at is a fixed interest rate. That's why the back of the policy has it all set up and easy. Pretty basic so far? This is our foundation because this week it gets a little bit confusing when you start talking about the other products. So this exact same concept, if we go into the UL category, there's 2 different types. There's a GUL and a non-GUL. What's the difference?
One's guaranteed, one's not.
What's guaranteed?
Yeah, premium.
Like anybody can get it, like it's guaranteed acceptance?
No, not that.
Okay? Everybody understand it's not guaranteed acceptance. I've actually had people come to me and say, oh, I thought it was a guaranteed, anybody can get it, okay? It's not guaranteed acceptance, it's a guaranteed UL, okay? So when you're talking about a universal life policy overall, there's 2 different versions, obviously non-guaranteed and a guaranteed. And a guaranteed UL This $100 that goes in, this is all, it's a flexible premium. Okay, you guys have seen that before? Flexible premium, adjustable life, and universal life are the same thing. So if you assume you're gonna pay $100 into it, this cost of insurance is $70. Every year, this cost of insurance goes up a little bit. Not a big deal when you're going from 40 to 41. When you're going 70 to 71, it's gonna be a higher increase, okay? So when your cost of insurance goes up every year, and you're only paying the same amount, you have to keep an eye on what's inside this cash value. As these grow on here, instead of having a fixed rate, they actually go almost like an indexed annuity. It's kind of, I don't want to call it a variable rate, but it's a indexed rate. Okay? So if I'm paying $100 into this, I'm assuming that the interest rate's going to grow at 5%. Well, what if it doesn't grow at 5%? You might have to pay more money back into this thing. Okay? Everyone get that? We're assuming the interest rate that it's going to make, and we're going to keep an eye on that as the years go on. It's not a terrible thing, but it's definitely something you have to keep an eye out. If you run across people that already have life insurance and their cash value is $3,000, let's say this policy is 20 years old. If that is a $3,000 cash value, they're paying $100 a month, and their cost of insurance is $270 a month. What happens? Lapse. Every single month, they're paying in $100 into their bucket, and $270 is coming out. This thing is bleeding cash like crazy. Okay? The reason why is because that assumption of a 5% interest rate may have been 9% back in the 80s or 90s, and it's not doing that. Okay? So that's the big difference between a non-guaranteed and then the next one is a guaranteed UL. Same exact factors happen, but in a guaranteed UL, they actually have a provision built into it where if this cash value hits 0 and it's done, a guaranteed UL will continue going all the way through until that guaranteed period. So that's what's guaranteed on a guaranteed UL. Okay? Just like I wrote in the middle there, if you have a guaranteed UL, they're fully underwritten and they guarantee death benefit and premium, not a guaranteed cash value. The non-guaranteed one, again, they're assumed to a certain age, but when you go with the Omaha one I was talking to you about before, Brandon as well, the Mutual of Omaha, the Express app, they did away with their guaranteed.
Did they tell you why they did away with that? Because it was just one day and I was like, oh.
Maybe just rates?
Yeah.
Rates are bad right now? I'm not sure. So the one that we're doing right now with the Express app, okay, it's guaranteed for the lesser of 20 years or to age 80. This doesn't mean their policy is automatically going to go away, okay? Back in the day when I first started, we wrote Lincoln Life Insurance, Lincoln Financial Group, and those policies are running full steam right now. The indexing strategies actually outperform, and they're doing just fine. People have been in my house to try to replace them, and I explain to them exactly how they work, and it doesn't make sense. They're better off hanging on to them. Okay? I'm going to show you where these kind of fit with different things and the pricing strategy. All right? So, any questions so far? Please stop me and raise your hand, because a lot of these guys have heard this before, and if you don't know the answer, like if you've never seen this, then let me know. Bucket presentation, money going in. The only difference in all of these is the rate that the cash value grows at. The only thing that's guaranteed is going to be the, if you have a guaranteed UL, it's going to be all those two factors there. So, why do we write different things? I'll show you this with a 65-year-old male. I'll just put it right next to it. So Brandon, I'm going to use you for example because you've been asking me like crazy with these things, okay? 65-year-old male going on to Medicare, he needs $25,000 in life insurance. The guy's in fantastic health. What do you write him?
Guaranteed UL.
Okay, which company?
I would go with American National
Okay.
so far.
Would you have gone that without the notes on the board?
Yeah, because I've just done 4 of them.
All right, checkmate, checkmate.
Well, Matt's done 4 of them.
But this is important. There's a lot of different nuances to it. I used to write North American. They were in my back pocket. And just like they did with them, they're just automatically gone unless you do it over a higher face value. So to give you an idea, because a lot of people just write a basic whole life just to get life insurance in there. A basic whole life under Transamerica, again for a 65-year-old male, 25K is $129 a month. Okay? If somebody's in really rough shape, maybe you're worried about their height and weight, maybe something else is going on, they don't want to have a pyramid done, and they just want to do it, that's the basic way of doing it. 25 grand for 129. If they are in excellent health, you're exactly right. You want to go with an American National. American National go as low as 25,000. Protective will go as low as 50,000. Okay? Head to head, Protective is going to be better if you're doing a $50,000 policy. American National is a little bit more expensive. But to give you an example, I'm only doing this just to give you a cost comparison and why these actually make sense sometimes. So to do 40,000 in a basic whole life is 205, and that's only for a 65-year-old male. You could actually do a protective. You guys can see this over there, not out. 50,000 with protective is 163. If you went with American National, 25K is 105. So looking at the difference here, when people actually look at this, and it's important because you're going to run across other people that don't understand ULs or that they just don't want to deal with them. I've run across this before. I've replaced ones that were just written with like a Forrester's whole life. Lady was in perfect health. She lived out in Ravenel. I was able to switch it instantly because I explained her the different types. Okay? If someone's in really rough shape or mediocre health, go with the basic whole life. If they can qualify for one of these GULs over here, it makes a lot more sense. A $50,000 policy is only $163 with protective. You look at a $40,000 policy at $205 with the basic whole life. And even American National is $105 compared to $129. It's just cheaper. And in those situations, the reason why it's cheaper, tell me why. Why is this guy cheaper? What's that?
They're gonna do 1 year standpoint, they're real bad, they're really healthy, so they get a premium lower.
Exactly. Everyone understand that? If you don't explain this to people, they're going to think, oh, that's probably not as good as insurance because it's cheaper or something. I don't know. I'm just going to keep with what I have. Okay? There's 3 different qualifications of life insurance. There's guaranteed acceptance whole life, there's basic whole life, and then there's fully underwritten. Okay? Now, if I can get you guys out of this category and into this one, I can upgrade your life insurance to get you a better bang for the buck. Okay? So just be aware of how those are going with that. The non-GUL. The rates are drastically less, and again, it's not the end of the world. It's not right for everybody, but it's also a pretty decent product. I've written a couple of them, okay? And the reason why is because that same 65-year-old male, if he wanted 25,000, and he's not in the best of health, and he's not going to want to wait 2 months for medical records and everything else that Robbie just talked about, he's like, listen, I don't want to mess with too much here. I don't want to have paramedic nurses coming out. I just want basic coverage. A $25,000 policy is $81 a month. So this is the thing. At the end, you may have to pay a little bit more into this. Again, just as a caveat, I'm not saying that they will, but this potentially could go up if the assumed interest rate hasn't done what we projected it to, and the cost of insurance went really high. So there's 2 factors that have to happen for that to actually come into fruition. The first one is that the interest rates go to 0, not just for a year or 2, but consecutive years in a row, okay? So you can have an interest rate where it's 0, 0, and then come back at 12, 12, and now you're right back up to snuff again. But if this interest rate goes to 0 for the rest of the contract, and that cost of insurance goes to the highest that they can raise it all the way through, that's when the guaranteed provision comes in. Okay? For those 2 things to happen, I've never seen it before. Okay? That's why I'm not as afraid, because I know how to understand these a little bit more, but that's what these things are doing. So if people are afraid of like, oh, let's just go with the whole life instead, that's $50 a month more to go with the whole life. So why pay an extra $600 a year immediately for 15, 20 years in hopes of it not having a rate increase at the end. Any questions about that? That's why I write these, for the people who say, listen, I like the idea of having cash value building in there.
Would you repeat what you just said?
Okay, so as of right now, if somebody, the 65-year-old male says, I just want basic life insurance, and I don't want to have a paramed blood and urine sample done, okay? If they're okay having that done, go with the GUL, and you can go with American National for 105, okay? If they don't want to have a paramed blood and urine sample done, and they're not in the best of health, most people would go with a basic whole life here for $129 a month. So people are saying, I'm just going to go with this because I never have to worry about these things changing, right? If you're afraid of it to go to $129 a month, go with this one right here. It's only $81 a month. That's almost $50 a month cheaper. It may go up towards the very end, but you've had this for a number of years anyways. In fear of not having it go up, I would lock into this one now. If I'm saying that right, if it's coming across right. Does that make sense? Does that help at all?
Yeah.
So,
I'm sorry. So this example that you're giving me, the non-GUL, that would also include the IUL.
this is the Express app.
Okay.
So any kind of non-guaranteed, there's different ones out there. If you're gonna go with a GUL, I would just go with the other ones over there. This is designed for those people that like, man, I don't wanna go messing with a bunch of parameds and blood and urine.
So that would be the IUL.
It's the IUL,
It's
it's not
the
a GU,
Express.
it's the Express IUL.
Yeah, the Express IUL.
It's
Like Mutual of Omaha has.
It's like, yeah, through
But
Mutual of
that-
Omaha is the,
Yeah, Omaha doesn't have a GUL anymore.
yeah.
Right, they have the Express.
But
Yeah, so
the IUL works exactly like, sort of like, it works like the GUL though, but instead,
Is
it's
it
got the
priced
index
better?
side, but it's got the index side, yeah.
Okay, that's the one that's done on WinFlex. I haven't really messed with that one too much. That's one if you wanna like stockpile like cash and stuff in it there, so. These are just the basic ones that we're talking about for people who just want a smaller policy. Normally, I would have gone with North American or one of the other ones because it's easier to go through, but they jumped up their minimums a lot. So again, people are fearful of, oh Matt, that might go up a little bit. Yeah, but is it gonna go up $50? And that's a huge, great, increase right off the bat. I would go this route instead. And it's a simpler product. You cannot do this if they're over 70 years old. Okay? So just keep that in mind if they're over 70. All right, well. And then just to kind of give you an idea here too. So again, this is just where it fits in the different mix that we have. And if anybody else uses any other carriers that I haven't shown, feel free to talk about it, because I don't do a ton of ULs right now. I used to write a lot of them, and the interest rates that's all predicated on have gone really low because the rate market right now. So we're very limited. We had a lot more options before, and they kept taking things away like the guarantees.
The agencysalestools.com, I wasn't familiar with that. We use that in.
You're a good point to have in the audience. Thanks for mentioning that, Norman. I get a lot of questions about where to quote these things here. Obviously, you got basic whole life with CSG actuarial. I go to agencysalestools.com. We also have iPipeline. I'm having an issue with my iPipeline. It just keeps logging in and logging out. It's some goofy thing. But Agency Sales Tools is where you can also go to quote term and GULs. You go to agencysalestools.com. I don't even think it's one of our websites where you can plug it in and we offer all the carriers that are on there. Okay? You're going to want to do this with different ones unless you actually remember all of this stuff. You're going to try running, I tried running one of those Express ULs for a 74-year-old and it wouldn't work. Well, that's because the minimum is 70. Oh, I tried doing a North American for 40 grand and it wouldn't do it. That's because their minimum is 50. Okay? So, just have these in your back pocket and kind of learn how to understand these, and especially if you're in the house right away with them. If you've got somebody with an old, non-guaranteed UL, you might be able to fix that if it's hemorrhaging cash out every single year. If they've got 4 or 5 basic whole life policies in the right, and they're in fantastic health, go with a Protective or a American National, condense all of these mediocre plans right here into one big one. I do that a lot, if they're healthy enough to do so. My rule of thumb, if they cannot get a basic whole life, don't even bother with the other ones. Sounds simple, right? I've had so many people come and be like, yeah, I got this guy with COPD, got the client with Omaha, which UL would you go with? I'm like, none. If they can't get this, you need to go backwards or laterally, you don't go up to the next level. Okay? Yes.
I always wondered, I know I've written several of the North American and American National, but I had a client who adamantly wanted out of it. I wrote it a couple years ago, and they went to one of those functions in King Street where bring all your policies and we'll go over them, and they said it says flexible premium, adjustable life right on it. Tried to explain that to her. I tried to explain them page 4, it says guaranteed day 121, that's the difference. Why did they put flexible premium, adjustable life on a guaranteed UL?
Because you can actually overfund it for investment purposes. It could be a mech as well, but because these are flexible premium, I don't prefer it this way, but let's say somebody's doing pretty well and other salespeople kind of do it this way. You can actually say, well, what if we pay $400 a month into this? Cost of insurance is still only 70, let's call it $100. We're gonna overfund the heck out of this thing. We're gonna gain $300 in cash value, and then with that index rate, your cash value is even worth $1.8 billion when you retire. Wouldn't that be great? There's other ways of overfunding those things as well. So they're flexible premium in their nature with the UL, because you can overfund it. The guaranteed side is if you underfund it for a number of years. So when you actually look at an illustration, you're gonna see a guaranteed, and a guaranteed, an assumed, and then a midpoint. So they assume the interest rate to be at 5.89, and as long as it does that 5.89, your policy runs all the way through to maturity. If it doesn't, and it does the absolute worst case scenario, this Armageddon time, there is a chance the premium could go up in the future, okay? And then there's a midpoint there that gives you another number to look at. Other questions?
Can you overfund both of those, both deals? If you
Yeah.
wanted to? Yeah. Okay.
One thing I mentioned, again, questions I've been asked a couple times here too, is that instead of overfunding policies and doing different ones, I think it's a good idea to kind of separate into two different ones. Sometimes you can actually use one app to do it. There are some carriers that do that. Let's say you've got someone who's 40 years old and that wants both. I want guaranteed coverage and I want a big policy, but I just can't afford it. Do a hybrid of each. You could always do a 20-year term. I just ran the quotes for, was a 40-year-old male, Brandon? One of Brandon's friends. But it was a $500,000 policy for like $30 a month, okay? Do that and then a guaranteed UL with it and let them both run side by side. So you have one huge policy for 20 years and then one of them falls off, other one keeps going the rest of the way. Yeah, I don't like overfunding ULs. I know some people do that, but I mean, that's one. If you do borrow against it in the future, it can mess up your policy, and then if you cash it in, you lose the death benefit anyways. So I'm not a big fan of that. Anything else? What do you guys run across out there? Any other companies you guys are using?
Foresters does have a smart UL. They're doing the same, 75.
Non-guaranteed?
Yeah, same thing, 75 instead of 70.
Okay.
And it's got 2% more. So guaranteed 2% credit.
Okay. We have an entire back office. I'm showing you this. I'm going to be honest with you guys. I seldomly do this stuff anymore with these kind of policies. And when I do run across it, you've got a whole staff, not just in this office. Go right to Greg Haney and the entire Life back office. They will talk about hybrid ULs and all these different things in it. And you guys can teach us stuff all the time. So if you run across it, you've got local people here that have done these. But I'm kind of the dinosaur. I used to run a lot of the GULs back in the day, and I just kept flipping those. But there's a lot of neat products out there nowadays. I just want you guys to look at this as the skeleton as a whole and say, okay, term I got it, whole life I got it. UL's got a couple different things to it, but at least you got some of the minimums, maximums in there. But yeah, I like the non-guaranteed UL with the Omaha just because it's a quick issue. I've actually submitted these and they're done like 3 or 4 days later. If you go into this category, you're talking anywhere from 6 to 8 weeks.
Yeah, even longer if they are VA,
Yeah, VA, yeah.
trying to get medical records from them.
Records from them.
Yeah.
And you can even tell people that. Say, listen, we can go with different ones here, but as long as they understand their options, and tell it to them like that. Oh, non-guaranteed or it's guaranteed 80. Oh, I don't like that. Well, let's talk about exactly what that means. That's if both of those factors go absolutely awful for a duration of 10, 15, 20 years or so. Okay? And you keep an eye on them. You can actually overfund those, not overfund, you can add premium to it if you need to, because it's flexible pay. Some of the other things that we've talked about before in the past, just as a quick recap, if people have borrowed against their policies, Norman talks about calling on them all the time. If people borrow against their policies already, talk to them about that, because it's not just the loan they have to pay back, it's the interest as well. So if you've got a policy right here and it is whole life and you can't beat the $40 premium that they're paying, but they've got a $2,000 loan and an 8% interest rate, I mean, that's what, $160 a year, which is almost $15 a month. Well, that $15 a month in interest only, plus their $40 premium is now $58. That's just interest only. How much more can you pay into that? Another $30, $40 to get that loan knocked down? Now you're talking $70, $80, $90 a month. My $52 a month Transamerica or Omaha is a lot more attractive now. So if you run across loans out there, ask what the loan interest is, build that into their premium. Unless they got $2 grand sitting around somewhere, that's going to be paid off over a long, long time. If they have existing cash value inside of these policies, you cannot do it on agency sales tools, but another option is to take the existing cash value that's inside of here, again, that $3 grand, and you can actually do a 1035 exchange into another policy. So if this thing, and I've run across these before, where this thing's completely upside down and it's a plane that's about to crash, you can jump out with your parachute right now with $3 grand and get into a brand new policy that's going to run all the way through for you, if it's drastically dropping considerably there.
So you owe your monthly payment.
Yeah. If a whole life isn't an option, the numbers don't work for them. All right, you veterans, anything else I'm missing out there? For brand new people that I haven't mentioned? Terms, ULs, loans. If there is a loan against the cash value, let's say this cash value was $20,000 and there's only $3 grand left, 17,000 of that might be taxable. Again, not a huge deal, but if Marty was in the crowd, he'd be yelling at me right now. Whatever the loan is, they'll take a look at how much money they've paid into it versus that, and it could be taxable, so just be aware of that. All right, I'm done if you guys are done. If you need any help running these actual quotes, let me know. But again, I'll help you run basic stuff on here. If it's actual 1035s, you're gonna have to actually get into the software or go to the Life back office and give them all the numbers and they'll put them in there for you. All right? All right, thanks guys.
Thank you, Matt.
Thank you.
Thank you, Matt.